This is the briefing for Friday, September 15th. In doing these briefings, sometimes it's difficult to know where to begin. I understand I've got people that listen to these sometimes and people listen to them all the time. So I don't want to go back and rehash old information. But then again, I want to make sure that the analysis is complete and clear to most people. With that said, a couple things are going on. And one of them is the fact that we have really two alternative strategies that are developing. Now, yesterday's rally that we saw was certainly a kind of a wrench in the whole thing, because we really took out this high here, which was from Monday, from 9/11, and that was a little surprising. The internals really did not confirm that move. Breadth strengthened somewhat, but volume really wasn't there. And then, of course, the other internals that I monitored certainly didn't confirm the move that was going to happen. Now, the alternative strategies are basically that this was an impulsive move, testing the 430 area in the spiders. Then we got this rotation up. And the higher probability that I'm leaning against right now is that we're going to see another move to the downside that will potentially test 430 and take it out. Now, whether it tests the 427 area, and that's the area where there's equality between legs 1 and 3, is still yet to be seen. In my humble opinion, and what I'm leaning towards is that it's going to get taken out. And the reason I say that is that, and I can't get into the detail of it right now, but this whole price development here I've seen in the past, and it typically is a bearish scenario. Now, I may do a trade lesson on this, and I may do a paper on this, but this is basically a more bearish pattern in terms of a financial instrument that I've seen in a long time. The alternative strategy to that is that this is a rotational pattern, and that we're going to go back up and test the high at the 459 area, which is this high right through here. Now, the probabilities were such, and I discussed that in the daily briefings, is that as long as this high was not taken out, then the probabilities were such that this three-step move was the higher probability. That was taken out yesterday. But as I discussed in yesterday's briefing, the internals really did not strengthen to support that. And I suggested that if we took out yesterday's high, that we needed to see volume increase, and we needed to see breadth continue to increase as well, and not see any divergences in what was happening. Well, interestingly enough, the whole rally from yesterday was completely retraced today, and even more was retraced, trading through the 445 area, which is an important support area, and closing below 445. The second thing now that happened is that we're testing this low from this move comes in right at 442.75. We closed today at 442.92. So really taking this out is going to open up the higher probability now that we're going to test 430. So this is really playing out pretty strategically in terms of this rotational pattern being the lower probability and this move here being the higher probability. Now, Monday, they could throw a wrench in the ointment here, and we could see it, the market back above 445, and then of course testing this 450 area where it was close to the high of yesterday. I'm really reluctant to look at this from a bullish perspective. As I said during the week, I have a small short position on, mainly because of this chart pattern. And if this chart pattern plays out the way I think that it will, we potentially are looking at a very impulsive move to the downside. Now, we have a Fed meeting coming up next week, and that that Fed meeting and that announcement on interest rates certainly will have the potential for changing the perception of value on the part of traders and investors. And that means that it's a 50-50 chance as to whether we're going up or we're going down on Wednesday when that announcement is made. And it can change the analysis completely. So I have to preface my analysis based on that. But right now, I will add to my short position as soon as this low at the 442.75 area is taken out. And I want to see volume continuing to increase, as you can see that it did today. And I want to see breadth continuing to decrease as it did in today's trading as well. This is S&P breadth, so it's only 500 shares. But you can see that we had 312 shares that are negative. 52-week highs minus 52-week lows on the NYSE were negative 218. That was declined. So we had internals that were weakening, supporting the move in price in today's trading. Now, in terms of the NASDAQ, really the analysis is exactly the same. Either this is a rotational pattern, we're going back up to test the 388 area, or this move here is the development of a three-step counter trend move, and potentially we're going to take out, I should say, the 356 area, potentially looking at the 347.75 area. But I really believe that the higher probability is such that if we take out this low at 356, then we're potentially going to blow through this and look at testing the 323, 324 area and potentially even lower before it's done. Volume increasing today also in the Qs. Breadth was fairly negative, but not extremely so. So that suggests that Monday, if we get lower prices and we get the internals not diverging, but we get them decreasing even more with volume increasing, that we could see this begin to move very, very quickly to the downside. Now, there are some geopolitical and economic events that are occurring. I mentioned the Fed meeting next week. We've got the UAW strike that could have a big impact on the economy. And other things that are out there that could have an effect on the determination of value by traders and investors. But right now, all I can analyze is the information the market has given me up through the close today, and this is the analysis. Now, I have to be aware that in my assessment, the higher probability, and I'm not giving that a great probability, potentially just above 50%, that we're headed lower. Now, if we take out this low here in the Qs, as I discussed in the spiders, which comes in at 369 area, then that's going to increase the probabilities. Trading through the 356 area will increase the probabilities even more. So you can see knowing where the key reference areas are and knowing where support and resistance levels are really critical to trade management as well. But once again, if we take out this high in the Qs, which comes in at the 380.83, let's call it 381 area, then this strategy is playing out, and it's a counter trend rotation. And once we, I should say it's a rotational pattern. Once we test this high, then we have to determine, is the market strong enough to go higher, or are we going to see another rotation back to the downside? Breaking this low, once again, I think that's going to increase the probabilities that we're going to see much lower prices. Russell's showing pretty good weakness. You can see this move here is pretty significant. Testing 190. This was on September 1st. Is that right? September 1st? I think it is. September 1st, yes. That was a false breakout. And then, of course, we had the rotation back down. Now, you can see that this appears to be a head and shoulders top. And once again, I have to qualify that because when I see those types of chart patterns, I can't trade them until the neckline is broken. In the case of a head and shoulders top or bottom, and it's not broken yet, which would be right around the 181.75 area. And that's pretty close to this 180 area, that if that's broken, then that's going to open up potential test of 175. That's where there's equality between legs 1 and legs 3, or potentially test the 170 area. Now, I want to show this very quickly also because this could be significant. I think I showed this, it might have been last weekend or earlier this week. This is the Russell, the IWM. It has gone nowhere. If you go back to this area here where this high at 200 was broken through, that goes back to April of last year. So you can see the rotational pattern that the Russell has been in for quite some time. Breaking that is going to open up a potential to breaking this this 180 area is going to open up the potential to test 160, which would be the lower extreme of this area of rotation. And then breaking that would certainly suggest testing lower prices going all the way back to 2020. So that is yet to be seen. But watch what happens very, very carefully in the next week. If there wasn't a Fed meeting, I would be probably much more bearish right now than I am. But I just have that Fed meeting looming in front of me that gives me much concern. Now you can see what's happening with volume also in the Russell on this move to the downside. Russell breadth was fairly negative today. So this gives us really the potential for a fairly decent move to the downside. It's difficult to explain this, but the market is going up or it's going down. The probability assessment of one event occurring over another is our job. That job means assessing the probabilities, taking the information the market gives us and determining one event over the other. In my situation, I've determined there's a higher probability that we're going lower. What will change that is information that the market gives me that I am incorrect, and the alternate strategy is beginning to develop, in which case this strategy of a rotational pattern is becoming the higher probability, and then I can adapt my trading and my trade management to that as well. So right now, that's kind of where I stand. In terms of overbought and oversold, we are approaching oversold, but really not there yet. The NASDAQ is pretty much there in terms of the short term, but this does not preclude the indices from trading lower in Monday's trading. Going to be a really important week. I can't stress how important next week is going to be. And I sit here all day long staring at this situation here, and it just leads me to believe that yesterday's trading, that I was thinking, well, the probabilities are changing based on yesterday's move, that this is not going to go to the bearish side of the market as I had anticipated, but we're going back up to test this high. That certainly was negated in today's trading as well. Overall volume, just difficult. This is NYSE volume. Now, today was triple witching Friday. So we always get those skews on option expiration, monthly option expirations. So that volume is skewed, but you can see we even had a little bit of a decrease in volume yesterday. So this volume chart is really no use to us in analyzing what's happening in terms of total volume. So I have to rely on what's happening within the financial instruments I trade as well, and you can see that we're pretty much increasing volume. Today was a decent day to the downside. We need now to break, because we are at very important support levels. We need to break those levels if this strategy is going to develop next week. If not, we may see another rotation back to the upside. And I discussed that in last night's briefing as well. Have a great weekend, and certainly I'll pick up for subscribers on Monday after the close, and I think that's going to be a very, very interesting day. Have a great weekend.